Well, first up, ABSA Capital were the first to issue a physically backed debenture, which gave investors exposure to gold. They further augmented their offering by recently listing the country's first physically backed platinum ETF. Now, this in addition to a range of equity and fixed income strategies that they have in place. So welcome to you, Vladimir. Thanks so much for joining us, of course, on the show today. So this new physically backed platinum ETF listed in South Africa last week, Friday. Today, officially the third day of trade. Yes. How much interest have you had in the product? I mean, what's the scale of investment you've seen so far?
Yeah, it has been quite an exciting couple of days. So today is, as you say, it's the third day of trading. We already have about 2 billion rand in assets under management after 2 days of trading. We have more interest today, so I think the product is growing quite fast, and we're very pleased about it.
Mm-hmm. Vladimir, we saw how popular the new gold ETF was. Just tell us a little bit about the mechanics of the platinum ETF in terms of where the platinum comes from, where it's stored, and how much the investor actually gets exposure to if he buys one unit.
Sure. Well, all the ETFs, the ETFs are defined by the fact that they have to be backed by physical holding of the underlying asset. So for the gold and platinum ETFs, you have to hold gold and platinum bullion. Each security, each debenture in issue is equivalent to approximately 1/100th of an ounce of gold or platinum. That platinum is stored in London at our custodians there. So basically, whenever it is relatively simple product. Whenever we have to issue new debentures, as we've been doing over the last couple of days with the platinum, we actually have to physically have to source physical platinum in order to back the securities that are issued in the market. Of course, the one constraint that has been imposed by the regulator is that in both cases, the gold and the platinum have to be of South African origin, so it has to be sourced here. Mm-hmm.
That is certainly interesting. So to support local platinum producers, but I suppose in South Africa's case, we are the key player in the platinum industry. What I find quite interesting is that institutional investors were pushing for a product like this. They certainly want to get exposure to platinum. Is that what you are hearing from investors right now?
Absolutely. We've done a roadshow last week with the largest players in the institutional investment market, and I think they were all very, very positive about the product. They all wanted to have that product, and we've spoken to them throughout the years on products of this nature. And obviously in South Africa we have quite strong investment in precious metals miners. So what the investors want to do is to have a way to diversify, i.e. to invest in the miners, but also to invest in the physical itself. Mm-hmm. So this is what the product is really offering them.
Vladimir, just to come in here, I mean, that 2 billion rand in 2 days, that's pretty good going. What have investment managers been using as a substitute in lieu of the absence of a physically backed platinum ETF?
They were doing different things. Some of them were keeping the money in offshore ETFs, offshore platinum ETFs. Some of them were keeping the money in the platinum ETNs, and we have a platinum ETN as well, but that one is treated as a foreign asset. Some of them were keeping their money in platinum miners. So I think there's all those different sources of funds that people are utilizing.
Mm-hmm. And just another question, with the gold ETF, the new gold that was introduced a few years ago, we thought it would be a lot sooner before we saw the second physically backed ETF. Can you just tell us why it takes so long to put these products together?
Well, I think the main issue was really to do with exchange controls and the regulation covering the fact that these products have been treated as foreign investments, and obviously that limited quite a lot the potential scope of the products. So obviously when new gold was listed, we received an exemption from the Reserve Bank based on the fact that the gold was of South African origin. After that, the rules changed, and I think now in the recent budget, the Treasury and the Reserve Bank, they relaxed the regime. So at the moment, what we have is that the physically backed ETFs where the commodity is sourced locally are going to be treated as domestic assets, and that has opened the doors for us to list the product.
So potentially new products could come to the market.
Yes, of course.
Yeah, as a result of that. Let's talk about this platinum ETF relative to the size of the overall platinum ETF market, if you could call it that. I mean, how big is our platinum ETFs relative to other drivers, I suppose, of the platinum price right now? If you had to take a bird's eye view of all the drivers, macro drivers of platinum.
Well, first of all, I think it's important to note that the platinum market in itself is quite small compared to the gold market. So there are a few platinum ETFs globally, and even after a couple of days of trading, our ETF is amongst the biggest ETFs, platinum ETFs globally. So we have a pretty good chance to actually become amongst the largest, if not the largest, platinum ETF in the world, if the trends continue. But the important thing to note is that this demand for a platinum is really represents a significant demand for a physical commodity, and we believe it's going to have a positive impact on the price of platinum, because it takes the metal out of the market.
I mean, we've seen the platinum price in South Africa, in fact, in the last few days, or the platinum price rally. Do you think that it could be tied to the launching of a new product like this, or there's so many other factors? You're not driving the price yet.
No, I don't think that is. I think it's too early for that.
Yeah.
But I think over the long run, I think any new source of demand is good for the price of platinum.
Vladimir, I just wanted to come back. Obviously, the new gold ETF, we saw a big sell-off in gold I think it was last week, when the price dropped off quite a lot. What's the investor demand and sentiment been for new gold at the moment?
Well, actually, what we experienced was that people were buying at the dip. So when the price was falling, we have seen quite a lot of institutional demand for the product, and I think people are long-term positive about the gold price. So they've been accumulating at a lower price.
Let's go on to some of the other ETFs that ABSA Capital has.
Sure.
An interesting one, new funds, the Equity Momentum ETF, and looking at that one-year return certainly is juicy. 28% is where it stands right now. But talk to us about the strategy that you've got with this specific ETF, that momentum strategy.
Sure. Well, basically, to start one step back, what we decided to do is to create a whole series of ETFs. We call them component ETFs, to cover basically the major asset classes, and also within equities the major investment styles, so the major factors, and those factors are value, momentum, market, and we basically have ETFs that cover each one of those. Momentum is an interesting one. It is an only ETF that follows directly a momentum strategy. So basically, we are tracking an index, South African index that was designed by Barclays, and really that index is putting weight or invests in the companies whose price exhibit the price momentum, i.e. whose price is rallying the most over a period of time, and it is shown in lots of research that if companies' price rallies, it will continue to rally for a while, and we are exploiting that particular fact in the investment market. So obviously, one needs to take into account that there are various phases. That sometimes the momentum strategy will outperform the rest, and that's what we've been experiencing. Sometimes it's value, but importantly, we have all of these building blocks. So what smart investors would do is combine those building blocks and not just invest in one factor, but invest in a portfolio of those in order to create optimal returns.
I would assume that the underlying shares obviously change in a momentum ETF quite often, if you're tracking that benchmark.
Not quite often. Basically, the index itself gets rebalanced on a quarterly basis. So we would rebalance our holdings on the same basis.
Vladimir, are investors buying into this idea of diversifying different strategies within their baskets?
I think that is the kind of the next trend that we see in the market. That is creating portfolios or investment solutions out of passive or sometimes even combining passive and active investments in one portfolio that is designed particularly to suit the needs of investors.
So, and we've obviously seen, you've talked about the eRafi suite of products. How have those stacked up in terms of performance over the last few years?
Well, eRafi, for example, that is a suite of investment products that we've designed with our colleagues from Gridrod Asset Management, and it really is looking at fundamental factors for valuing the company, and really you can think of it as a proxy for a value investment strategy, and those products have performed quite well. One of our eRafi products, FINI 15, was recently got an award by Morningside for the best sector fund overall.
First
in
ETF,
South
I
Africa.
think, in fact.
First ETF and that was in competition not amongst ETFs but all the funds, active and passive.
So certainly a case, to use these different strategies, and that's been your strategy towards the market, is to provide those. We've got a big market that's been largely untapped by passive strategies, and that's obviously the retirement savings market. But we're hearing a lot of noises around efforts to try and change that. You've got the two MAPS products there. Are those going to be Regulation 28 compliant at some stage?
Yes, they are. They are regulation. We are. They're constructed to satisfy the constraints of the Regulation 28. So any pension fund can invest in them by themselves. We are also our strategy is to utilize the component products that we already have, and we have products covering all the major asset classes, from equities to fixed income to cash to inflation to commodities, of course, and we will be combining all those into portfolios in order to create optimal retirement products, amongst others, for our clients.
Let's just talk about, as you say, that's a government, national treasury looking to incentivize savings and more less expensive products, rather. But just before we end off here, tell us about some of the more popular ETFs that you have in your basket right now.
Yeah, well, the very popular, of course, are the commodity ones, the New Gold and New Plat. I think we're having quite a lot of demand for our fixed income and inflation-linked products, for our Gavi and ILB ETFs. Also, our money market ETF, the Tracy ETF, has been very popular. So I think we're seeing lots of inflows there. Obviously, people are looking at momentum given the performance of that fund. So I think it is going to be quite interesting to see how those develop over time.